Welcome back to the Burrow. It's your host, Lala Bunny. I'm the head trader at Bimbo Trading Academy. And in today's video, we're going to talk about how I opened up over 10 brokerage accounts in 2024. So I wrote down each account and the year that I opened it. In a previous video, I mentioned how my first account was opened. It was SoFi, and that was in 2021, and I was 34. And since then, in December 2023 is when I started getting more serious about trading, and I actually opened up an Ally Invest account at the age of 36. Now, I bank with Ally and they were offering me a promotion, so I went ahead and I opened up that account. However, I no longer use that brokerage account because it did not work for me. And I have criteria for which brokers I use. And one that's super important is that they allow me to buy fractional shares. So on Robinhood, I can buy a stock, I can buy $1 of a company. On some of these other brokers, they either force you to buy a whole share. So that company, if that stock is worth $1,000, you have to have a full thousand just to buy one share of that stock. And I don't want to be that deep in one stock. I want to diversify and spread my money across many, many stocks. Now, some of these apps require like $5 fractional shares called stock slices. Some of them require $10, and that just does not work for me. I really like to limit my risk. So I was looking for brokers that allow me to buy $1 or even sometimes less of a stock. The second thing that I look for a broker is that they allow me to trade volatile stocks. So volatile stocks are more risky. As a trader, we are searching for volatility. As a broker, sometimes because if you have a margin account, they're actually lending you money. They want to control which stocks you can and cannot trade. And I'm not talking about a halt here. There is something called a halt or a market-wide halt where a stock across the board, you cannot trade it for a period of time because it's so volatile that they halt it until all the orders can catch up and then it proceeds and it goes up or down. That's a halt. But I'm talking about brokers who specifically limit your ability to trade certain stocks by turning off the buy button. And those brokers don't work for me. Again, I'm a day trader. I look for volatility. That's not going to work. And the last thing that I look for is data. Or data. So what I'm looking for is that if I do have access to level 2, some brokers provide that for free. Some you have to pay for. Actually, I don't know any that provide it for free. I'm pretty sure you have to have some market data subscription to access level 2. Hey, if there's one out there, I know Robinhood offers it with a gold subscription. I don't know if they offer it on the free accounts, but please correct me in the comments if anything I say in any of my videos is ever incorrect. Please go ahead and correct me because we're all learning here. So access to data, there's something called level 2, but there's another part of this for me. So I trade between all hours. So there's the market is typically open from 9:30 to 4. There's pre-market from 7 to 9:30. Then there's after hours from 4 to 8. Then there's even 24-hour markets that trade overnight. So I want to know that when I log in and check my account that I can have the most up-to-date data, that if I log in at 7:15 that I can see what the price is exactly at 7:15. And so even though I opened over 10 brokerage accounts, a lot of them got eliminated because they might offer pre-market trading. You might be able to place and execute the order, but they're not updating it in your when you log on and look at like your profit and loss, like your gain, daily gain, it's old data. They haven't updated it yet. So that's just doesn't work for me. I like to be able to glance at my account and know exactly where I stand at that exact moment in time. And I have to trade pre-market and after hours. That's when a lot of stuff happens for me, the way I trade. So the criteria again that I'm looking for is like they allow me to buy fractional shares, they allow me to trade volatile stocks, and they give me data. So that's how I evaluated these brokerage accounts and decided which ones I was going to stick with and which ones I was going to dump. So back to number 2. So I mentioned Ally Invest. And the other one that I opened is called Plynk. And Plynk is run by Fidelity. Plynk did allow me to buy fractional shares. What I love about Plynk, it's really good for beginners and it includes the stock symbol. No, not the ticker, like little symbols of the company, like logo, more like a logo, and they're like little circles. And what I really liked about that is that I have a lot of investments, so it helps you keep it straight, and it's a neat little feature. Plynk is better for long-term investing. It's not best for traders, and it didn't allow that pre-market and after hours data. So that's why I still use Plink and I still like it, but it's just not ideal for day trading. The charts are not great either. But okay, the third one is Robinhood, and well, technically fourth if we count SoFi, but the ones that I opened recently, it would be the third one. Okay, Robinhood. Robinhood is my favorite. Yes, people have issue with Robinhood. I'm gonna go back to it at the end because I have a lot to say about Robinhood. So we'll just proceed. Okay, the next one is WeBull. I like WeBull. It's fine. I don't use it that much, but I do use it for its news. And I opened that one in January 2024. Okay, the next one I opened is Public, and I opened that account in February 2024 at age 37. And oh yeah, Public tried to make me pay a tip. So it was ridiculous. So when you place a trade on Public, there was this extra like $1 charge. And I was like, is that a commission? What is that? And I found out it's like a tip, optional. But the default setting, I actually paid it. And I had to contact customer support. They did reimburse me for this tip. And then I had to change my settings and make sure I was not leaving tips every time I placed a trade. And I just thought that was ridiculous that they even include that in there because we're here to save money and make money. We're not here to give away our money. All right, so Public is a no-go. Trade Up. February 2024, I also opened that account and it's fine. I don't use it anymore. It just wasn't fully functional for what I needed it for. If you like it, that's fine. It's just another one you can open. There's so many, so find out the one that you like because they all look different and some of us like visually, even things like contrast on the screen are important. So when you're trading, you're staring at the screen a lot. So make sure you like, I think they call it user interface, UI. So you want to make sure that the app has a good interface and you want to see if it has a desktop version as well, which means you can use it on your computer if you have a laptop or a desktop. And these are some features. I mean, all the apps have different features. Different companies have different features. Some things are free, some things you have to pay for. So this is all for you to evaluate. I'm glad I downloaded all 10. Like, I'm glad I have all these apps because it allowed me to really narrow down what I need when I trade. It really showed me all the options, so I wasn't limited. And moving forward, then I feel more confident that I'm not missing out on anything because I've tried them all. All right, so eToro. That was also opened in February 2024. eToro had its limitations. So they were one of those brokers I was mentioning that when a stock gets too volatile, you can't even buy it. And for me, that doesn't work. Additionally, with fractional shares, they were requiring that I purchase at least $10 worth of a stock, and that does not work for me. So eToro is a no. MooMoo I really like. I just like the colors. It's got a really cute this little cow logo. It has a community. You can develop a watch list. I I like MooMoo and I love the limit order feature. So I'm gonna try to explain the difference between market and limit orders. But the best place to go for information like that is something like Investopedia or other areas on YouTube where people explain this. But just briefly, so when you place a market order, there's something called the bid and the ask, and it's like the price that the buyer is wanting for the stock to buy it at, and then there's the seller, and there's a price that the seller sets, and these prices is called a spread. And when the spread is narrow, there's not a big difference between the bid and the ask, but when it's widespread, there's a huge difference between the bid and the ask. So in order to reduce when you place your order on the market, it can get filled anywhere in between that range. And the benefit of a market order is execution time. It usually gets executed very quickly. So if you're trying to get in a trade quickly, you should you should make a market order. Now, a limit order It can be on the buy side or the sell side. On the buy side, you're saying, I'm willing to pay for this stock, but only up to this price. On the sell side, you're saying, I'm willing to sell this stock, but only if I get at least this price for it. So a limit order, once you set that, sometimes it just sits there because there's no one else on that market who they can match with your order. And sometimes you have to adjust. These stocks are moving rapidly, and you need to adjust your limit order. So some brokers, which this is the only negative I have, one of the negatives I have on Robinhood, is that if you place your limit order and it doesn't get filled, you have to cancel it and place another one. That takes a lot of time. I noticed that's the same for eTrade. It's a little easy to adjust, but it cancels your order and makes a new one. But you have to go through multiple screens to get this all done. With MooMoo, it is so easy. So you place a limit order. And if you're not getting filled, you can either press the down button or the up button to change your price. And you can even, sometimes it's down to like the penny or a percent of a penny. And you just click this or you can edit it, but it's just like such an easy function to get filled. So like, let's just throw a number out there, 364. So if I want to buy something and I say I'm willing to pay 364 and it's just sitting there, it doesn't get filled, I'll just click the button. Okay, 365, click another 366, 367, boom, filled. So I didn't have to spend any time canceling the order, trying to place a new one, canceling that one, placing another one, canceling that one. Like that just eats up my time. So the fact that I can just go filled, I love it. So for that reason, I think MooMoo is very good for day trading. That was a little long-winded, but that could pay off. It's a little gem for you guys and girls and ladies and whoever's watching because I'm not discriminatory. Okay, so Charles Schwab, Thinkorswim. Okay, Charles Schwab bought Thinkorswim, and a lot of traders swear by Thinkorswim. They love it, and I find Charles Schwab just a little bit boring, and it works, but it not great for me. It just was fine. So if you like it, I love it, but for me, not much more to say there. Okay, eTrade. eTrade I like. I use eTrade almost every day, and the only limitation I have with it right now. Oh, I stopped talking about when I opened them. Okay. Charles Schwab, I opened in March 2024, and eTrade I opened in September of 2024. So, eTrade I ended up opening 2 accounts because they gave me promotions. I was able to open up 2 separate accounts. The limitation that I was speaking on is that, give me one moment here. Okay. The pre-market stuff, that's what I forgot. So yeah, with eTrade is just weird because I can place orders pre-market and aftermarket, but it doesn't give me the updated P&L. So I'm like, it's almost like I'm flying blind. And I think someone said that if you have over $1,000 in your account, like then you have access to that. So that's something I would need to look into, and I would need to get special permission from my broker to get access to that pre-market data. And right now I don't have it, so that's frustrating. Okay, moving on. Last but not least is Interactive Brokers. I opened this in December of 2024, and Interactive Brokers is a great app. I'm still getting a little bit used to it because I've only had it for a little bit over a month, but it's very good, and they have a desktop version, and it's known as having good margin loan rates. I can explain what a margin loan is, which segues very good into talking about Robinhood. So, okay. If you look at my Kinfo, which is how you can track my trades, that is linked to my Robinhood account. My Robinhood account is my largest account. And the reason why I choose Robinhood is because, again, they allow me to own those fractional shares. They allow me to trade volatile stocks, and I have margin. So I decided to go ahead and pay for Robinhood Gold. Robinhood Gold costs $5 a month. By the way, this is not an advertisement. I'm not affiliated. It costs $5 a month. And once you hit $2,000 in your account, you're eligible to have a margin account. And for that $5 a month, I have up to $1,000 available to me as a margin loan. And the rate on that margin loan, I could pull that up while we're speaking. So, because the rates change. So currently. Oh, also my phone freezes and my phone is cracked. So sometimes it's a little slow. But okay, my margin used, it doesn't show me the rate. Let me just see. Annual rate 5.75. Okay, great. Okay. I'm going to break down margin and then we're going to end this video. So, a margin loan is secured by the value of the stocks in your portfolio. So as those stocks, because the value fluctuates, goes up and down, the amount of margin available to you goes up and down. If that $2,000 level that I told you is required for your margin account, that's your margin maintenance requirement. If that dips too low, you will get a margin call, and you have to put funds in to restore it up to that $2,000 amount so you are still eligible for margin. What are the benefits of margin? Margin gives you leverage. So there are stocks that it depends on whether the brokerage, like the brokerage sort of rates them on how secure they are and how much margin is required to buy the stocks. Some of them is 100%. So GameStop is actually 100%. That means you pretty much need the cash to buy it. The broker's not going to lend you extra money to buy it. However, some of them are 50% and 75%. And that means you only need a fraction of that amount of money in order to purchase the stock. So the benefit of a margin account is it gives you leverage, meaning you can purchase more stocks than what you have in your account. It's almost like a line of credit, but you can think of it almost like a credit card as well, but a secured one. So the benefit to me was that since I buy $1 of every stock, I was only able to own like about 2,000 stocks, but with my margin account, I'm able to own over 3,000. And I do pay, again, that $5 a month through Robinhood. Gives me that first $1,000 of margin free. It's not free, it's included in the subscription. So subscription fee. If I go above, if I were to add a lot more money in my account and get a lot more margin, then I pay that rate on top of the five, anything above 1,000, I pay a rate. Okay, now why would I do this? So if you make more off of your stocks, then that margin rate, you're going to be profitable. But if your stocks do not perform well and you're actually paying to own those stocks and they don't perform well, you can actually lose money. So they say that margin is a double-edged sword, and you have to be careful in how you use margin, how you use leverage. The real benefit of margin is that when you buy and sell stocks, you don't have to wait for them to clear. So in a cash account that's non-marginable, you just have to wait for the funds to settle. But if you have margin, you can do trades quick, in and out, in and out. I love that, but there's this PDT limitation, pattern day trading, that unfortunately restricts how many day trades you can take if your account is under $25,000. So I will do another video about PDT rule. But let me sum this up. So the reason why I like Robinhood is